Have you noticed interest rates are getting higher for your second home, vacation home, or even your investment property? They are. Hi, Brandon Lewis with Integrity Home Mortgage here. I've been a residential mortgage lender for 20 years. Worked with an amazing team, my wife being one of them, I have to say that. And the other one being Shannon, she is an absolute rock star. But we focus on taking the pain out of the process, and we run this little YouTube channel to provide some great tips and helpful information for anybody going through the home buying process, refinancing, or just has any questions mortgage related. So go ahead now, hit that subscribe button. Let's go ahead and make sure we don't miss any great information going forward. Great tips, good interviews, all types of market updates. So again, hit that subscribe, hit the thumbs up. Let's have a little interaction and have a little mortgage fun. Well, as I was mentioning, so as I mentioned at the beginning of the video, we want to talk about why interest rates are seeming to be higher on second homes / your vacation homes and investment properties. These are what's considered your non-occupied properties. Obviously, your primary residence you occupy. So as non-owner occupied properties, they do carry a little higher risk than your primary home would, or the mortgage on your primary home would. But like I said, investment rates, second homes, vacation homes, all the rates are going up right now. And here's why. The Federal Housing Finance Agency, FHFA, made a statement on March 10th requiring that Fannie Mae and Freddie Mac, keep in mind they are controlled by the government, but FHFA, the Federal Housing Finance Agency, has now put a requirement in place for Fannie Mae and Freddie Mac on the mortgages that they hold in their portfolios. FHFA wants Fannie Mae and Freddie Mac to reduce their non-owner occupied portion of their portfolios down to just 7%. And the government wants less of those loans in the portfolio. Again, that's going to be your second homes, your vacation homes, the rental properties. So my investors, pay close attention to this one. All right, so why do they want this? It's risk. It's all risk assessment, risk-based decision. So if you look at it, if I own a house, I own a rental property as well, but let's say I get laid off from my job. Stats show that I'm going to stop making the mortgage payment on that non-owner occupied property that I have, the second home, the investment property, in order to make my mortgage payment on time for my primary residence, right? Keep a roof over the family's head. So therefore, your non-owner occupied properties are a bit riskier because you do have another home to live in. All right, so on March 10th, they said 7% of the portfolio, and that's it. Second homes, investment property. So how do we get there? And what are the limits at now? Well, currently right now, the percentage of the Fannie Mae and Freddie Mac portfolio that consists of non-owner occupied properties is about double that. It's about 14–15% is where they're at right now. So how do we slow this down? How does Fannie Mae and Freddie Mac slow down the origination of second homes and investment properties? In order to cut the portfolio in half of the non-owner occupied properties, they need to originate less loans or take less loans of non-owner occupied properties into their portfolio. Now, how do they do that, right? One way is you raise the price. So immediately you're seeing that Fannie Mae and Freddie Mac have added what's called loan level price adjusters to second homes, vacation homes, and your investment properties. What does that mean, a loan level price adjuster? That just means that the risk of these properties is being factored into the pricing or the interest rate that you receive, and now they're going to raise it up a little bit more to make it less attractive. That right there will slow down the flow of mortgage applications for your non-owner occupied properties. Again, second homes, vacation homes, and your investment property. That's one way, raise the price, right? Less people are going to be interested if you jack the price up. FHFA is also hoping that private mortgage investors will get out there and invest more into the non-owner occupied property space. So raise prices, and hopefully we have more outlets to purchase these loans other than being a government-based entity, Fannie Mae, Freddie Mac. Now, keep in mind, Fannie Mae is trying to go back to being a private company, not back to the GSE status, which was government-sponsored entity. They want to be a full-blown private company again. I think that would be a great move, and that would make pricing a bit more flexible. All right, so just to recap, why are the rates going up on second homes and investment properties? The government wants less of those types of loans in Fannie Mae and Freddie Mac's portfolios. Those are riskier loans. Just like back in the early 2000s, Fannie Mae, Freddie Mac started purchasing subprime mortgages. That's right, the riskier loans, right? They saw the private sector was banking on these loans. So the administration at that time said, Fannie Mae, Freddie Mac, let's juice up some of these subprime loans. And of course, we know what happened there when the market crashed. So this is a preventive measure that's going to protect Fannie Mae and Freddie Mac, fortunately, from any bailouts or large government assistance like we've seen in the past. So raising rates on your second homes and investment properties is what we're going to see for the next year or so, until the total percentage of the portfolio with Fannie Mae and Freddie Mac is at or below 7%. And again, that's just the non-owner occupied properties, second homes and vacation homes. All right, folks, that's what we have today. That's going to tell you why the rates are going up on the investment and the non-owner occupied property. So if you're looking to get that second home, you better expect to pay a little bit more. We do expect this to impact the second home market quite a bit. We're going to see more cash purchases. We're going to see less competition on the mortgaged offers. It's definitely going to be interesting. So keep a close eye. Let's see if Fannie and Freddie are making the right call or taking the right advice from the FHFA in regards to reducing their portfolios down to 7%. All right. If you like the information you heard today, again, please click that subscribe button. We're putting up new content as soon as we can and as fast as we can. So keep watching, subscribe so you don't miss anything. Hit like, give me a thumbs up. Let's make it happen. See you later.